Hey everybody, in this video we're going to go through what happened today with today's tech carnage. We're going to take a look at the indexes at the end of the video, and we're going to look at some of the larger cap stocks today and some of the ones that people wanted to see from Twitter and what happened, and we're going to find some actionable ideas in here. I may point out some short ideas as well. Obviously you have to do what's best for you. If you're not comfortable shorting, then just don't do it, and just avoid these stocks. Look at them as avoids rather than shorts if that's not for you. But, we can go through these. We'll go through them and we'll talk about them. As always, subscribe to the channel and click notifications because what we go over is extremely timely. So let's just jump right into it here. Here's Microsoft. This was the first one I was asked to look at. And let's make this line just a little bit thicker. Let's get rid of the arrow. Okay. So you have this wedge and then you rejected the wedge, right? You broke through it, you rejected it, you came in and you gap filled. Frankly, of all the stocks that are out there that are the large caps, this is hanging in there. I mean, if you take a look at this, you were really 4% off the high. I mean, that's crazy considering what's going on out there right now. So keep that in mind, everything in perspective. I personally think that the larger caps are going to get the money first. It's what I've seen over doing this for over 2 decades. I mean, it's pretty clear what happens, right? Institutions need to put money there so that they have liquidity so they can get out. So they're not stuck in things like, name the blow up today. So that's why you're going to see a lot of the other stocks come in pretty hard. But just there's lack of liquidity. So here you are. What would concern me here is a close below the 21-day or the 50-day and this 231. That may happen, and it just might come down, bounce, and go right back up. But this is showing no signs whatsoever. We have not broken one major support level, nothing. So this is acting exceptionally well. And, if you're, while I'm on this topic of large cap stocks, and before I forget, because I will forget, because there's so many topics I want to go over. This FNGU, okay, this is the FANG stocks 3X'd. So, and we've played this before in the newsletter and done exceptionally well with it. And if you don't get the newsletter, there's a link in the bio, in the description. Just click it. The newsletter's free. It comes out 3 times a week. Stock ideas, actionable ideas, index ideas, and I give a little color commentary. But the reason I wanted to bring this up for a minute is let's just blow this up and see what's going on here, right? So this is nasty what's happening here. I'm going to get rid of these indicators for a minute. Okay, you broke your upper trend line, so this can come down. Now, this is an index, essentially. It's the FANG 3X. What you have to expect with something like this is eventually it's going to find a support. And let's say that support is 25, just for the sake of argument. When this market bounces, and it will bounce, they all bounce. So when this bounces, this is something that you should consider looking as a long, because it'll give you exposure to the market. At the same time, you don't have individual stock risk. So, and that's where people are going to run into issues when we start rallying again. We have to base first, but when we start rallying again, people are going to run into issues that are underperforming. It's hard to underperform if you buy the largest tech stocks at 3X. So this would help you not underperform. It's just an idea, but it's definitely something that I'll be adding to the portfolio when we bottom. So keep this in mind. Right now, I would not touch this with a 10-foot pole. You have the 21 and the 50 crossing, the 5 and the 8 are broke. We have this what's called the frozen rope bar on a rising wedge. So I do think you're going to test this 25. You break that, you're going to 22.40. So, and that's pretty clear that there's a little support level right here, right? Bonk. So you go right down to here. So I'm in no big hurry to buy this, but when this does reverse or get really oversold and look like we're going to get a big bounce, this is something that I would use to get in there. And let's just stick with the stocks for a little bit. Square, this was one I put out there today, on the short on the newsletter. And I got some questions about it, and I'm just going to walk you through the trade and why we did what we did. So it executed, but I wanted it to get below these bars, and then it did. And then by then, I wanted to put it on, and then that's why I said 216 or higher. I'm comfortable here. We broke 215 today. We should go to 201. Frankly, I think we can go a lot lower. You could ride this trend line and channel the whole way down right now and be at 175. And that's how I arrived at that target price for people that are looking and trying to figure out how to get there. So, and then you can see that there's like a little level support at 170, and there's some support here, but I don't see this. If it gets this bad and we break that low, if we get to this low, we're not going to stop there. We'll keep going. So just keep that in mind. This is not one that I would be I'd be adding to now at all. You have the 50, the 21, the 5, the 8. They're all starting. They're all rolling. They're all pointing down. The open was the high. The low was the close. It doesn't get more bearish than that. It's about as bearish as you can get. Docu is the other one that we put on there today. And, you know, it's doing exactly what we thought it would do. And we're a little bit ahead of this one. It really hasn't started yet. This one has more probability of being a big sell down, and I'll just explain why. So let's just start and look at this. You have this whole base right here, right? So let's just draw this line so that you can see this. It goes all the way back to about here. Okay? And we're going to just drop it down just a little bit. So you can see this base. And I'm going to move this over so you can see the number. Okay, so let's just call it 186. This is an enormous base. Overlay that with this. I'll start here. I'm below the 200-day moving average. There's no bulls left defending this. It's just panic mode. Once you break this 200, this is the last bastion for bulls. Now the 20 is crossing, the 21 is crossing, the 50 is going to cross it. These two are going to start pointing straight down. So this could get really nasty really fast. Now, what's interesting about this, and I know people don't want to hear this, but, you know, look, this 92 level, there's no support here. This is just all straight up. There's no basing until you get to about 90. Now, I don't know that we get there, but historically, when stocks, if we go through a major correction, historically leaders, 20% of them correct 80%. So this has the opportunity to really come in. So one, if you're long this, you need to really reconsider or determine where your stop is and how much you're willing to risk and assume that it can get there. And two, being short this, I'm fine with it. If it takes out the high, we'll close it. But in my opinion, there's really no reason to. You know, if we just keep going down to these levels, we're at least going to here. That's my thought. We're at least going to 186, and I think it can get worse. SE, you know, all these charts are going to start sounding like a broken record, but let's look at this for a moment and see what's happening here. We failed this one, right? We failed to break this, and we rolled and we gapped down. We came up to that breakout point and failed right on that line, right? Now look at this. So we opened here and straight down low of the day. So this is as bearish as you can get. Again, see how we open and close, open at the high, close at the low. It's just systematic selling all day. There's no other way to say it. And what are we doing? You're probably going to 175. So if I was really interested in owning this stock, I'm in no hurry here, but you can see how that correlates right here with this, roughly. So I would be looking for this 175 level, and then that would be of interest to me. Until then, I would not touch this. And I'd get rid of these indicators for a minute so you can just see. I mean, all you have to do, you don't even need the color bars. You just throw in the bars and just read price and just see what's going on. You know, sometimes a different perspective is helpful. And you can see clearly what's going on here. So I use a couple different ones too. So you can take a look. Like these are called raindrops, and they can kind of show you where inversions may happen. But what's interesting here, let me get back to this real quick. What's interesting here is hits doesn't break. Second chance for it to break doesn't do it. Third chance doesn't do it. And now we're accelerating to the downside. So that does mean that we're due for a bounce here. It's just a question of when. Across the market, I think. And I'll get to that when we do the indexes at the end of this. So GME, I just want to touch base on. I got a bunch of comments about this one. Look, I don't think it's a zero. I also don't think it's a $300 stock, but we trade price, right? And in this one, I'll throw in the indicators for a minute here. take them out for a moment. So in this one, on Twitter, right in here is when we said buy it, or I said buy it. If it breaks this wedge, buy it, and we did. And then we said, okay, this is your first resistance, this is your second resistance, and then we hit, and we did fairly well with the trade. Look, since then, it's just exacerbated, formed this huge wedge, and all we're doing is coming down. Now, this break today, where you open right above this key support and then they just jam it down all day, this is nasty. And, the bears are definitely in charge of the stock right now. There's no question about it. So this could really come in. And I would not be surprised to see this go back into double digits. So if you're long this and thinking that you're going to see another rally like this bar is telling you that that's not coming. You have a falling wedge right here. And on top of the falling wedge, you have a break. If you gap down tomorrow, you'll have an island. It could really accelerate if you gap down tomorrow. So if you're in this, you might want to reconsider. And if you're short, you stopped right at the 50-day, you might want to really reconsider, because it'd be nothing for this thing to go to $40, $50. There's no metric out there that's going to convince anybody that this thing is worth where it's trading at right now. But no institution is going to step up and buy the stock and defend it here. It's all going to be retail, and retail always gets run over by institutions, whether or not people want to hear that or not. It's just a fact. PDD. So let's get to this. But PDD, you have this base here, and you're right here though. I kind of, I won't tell you to look at this, and I'm going to give you one at the end that we've been in before. That we got stopped out of today, that I think that you should buy if we do rally. So I'll do that at the end, just while I'm thinking about it. So what you have going on here is just a consistent falling, and you just have this whole falling wedge the whole way down. It's just nasty. And you can see this. Right? You can see that. So you're going to this 117 for sure. I don't know where you're going past that. Usually these gap fills hold, and you're at the 200-day. So if I was really, truly interested in this is where it makes it stand. And if it breaks this 117.55 level, you have to get out. But if you're looking at buying it, this is right where you start looking at buying it if you're thinking long term. If you're looking for a trade, it might snap back to half of this. That's always a possibility, but you really need to defend here, build it in base, and then go higher. But this is where that would happen. So ARK-K, this is interesting. People were asking about this. So we had this from the newsletter, and we were in at 112. And then when we traded up, and I'll show you exactly why I raised the stop. So I raised the stop right here. So you'll see this break right here. So here's my wedge, and then I broke down here. Why is my wedge here? 1, 2, 3 points. So once I broke that wedge, that was really going to take me into the 8-day as well. And I'm like, okay, that'll be where we'll put the stop on, because we shouldn't have done that. We shouldn't have broken the wedge that fast. We should have at least tried to get up to here, and we couldn't even rally to that point. So that's where we got stopped out of. Now you can see the tides are turning. So that little rising wedge is gone now, right? We're out of it. We locked in a $10 profit from the newsletter. It is what it is. I thought we could get more out of it, but we just didn't. So now look what you have going on. So you have a falling wedge here, and then you're on the lower end of it. What we have here, though, is that dreaded H pattern that we talk about, right? So this is a lowercase h. See how it's shaped? And this is setting up to test this 105 level. So I would not be a buyer here. High is the open, low is the close. This is nasty stuff, guys and girls. This is nasty. So you really just want to watch. Now you throw in the bells and the whistles with it, right? Okay, here's the 21-day, and here's the 200-day. You're going to 105. I mean, she's short, or she's long 7 million shares of TDOC. Like, she has a real issue that right now. And what you could do too, if you were interested and you really want to see where they could snap back, you can always throw in these indicators. So this is Bollinger Bands, and we talked about them before. When you break that middle one, that usually means, which way it's going to go. But this is interesting because getting to this level is telling you that you'd be ready for a snapback. And last time, that's exactly what it did. Now, it doesn't mean it can't fall through and then go back in. I would expect a lot of these stocks to test support levels and then bounce back. That's what I'm looking for. And that could be even as soon as tomorrow. And we'll get into that. So JD, so I don't know if it's just any, China stock that's having this issue, but you saw it with BidU today too. I have a friend that runs a decent sized fund, and we were talking about it, and they're shorting the heck out of BidU, and I guess I can walk through that one too. Look, this is just nasty. I mean, I keep saying the word nasty, but I think I'll probably title the thumbnail of this one nasty. But this is stuff that you do not want to be in. So let's get rid of these bells and whistles. Okay, so just look at price for a moment, okay? This is when I say island reverse gap, that's exactly what this is. So I have a gap here. I have a gap right here. You see how it gaps lower? It doesn't have to be much. I have a gap lower than this, right? So, and if you don't pick this stuff up right away, just ask me about it and give yourself some time because I've been doing this for over 20 years. So, you start seeing it a lot sooner. But if you really look here, you can see this gap. And what this is doing, and then this would be the other part of that base, right? So you just draw this right here. Just click on it. So you can see how we broke. You don't want to be involved with this, at all. Now overlay this with it. Okay, I'm below the 200. What was the open? The high. What was the close? The low. Everyone will say, all the bars did that today. They didn't. So they didn't. There was a lot of stocks that were actually up today that you could have traded and made money on. The W key trade, I'll get into that trade as well, probably towards the end. But let's just keep going here. So if someone's in this and you're not out at the 200 day, you need to find out where your stop is. And I just want to say something to a lot of the newbies that may be watching this. This can always get worse. Okay, this stock in May was here. So to think that it can't go back to 40 or it can't go back to 20, I've been around for a while. I've watched in 99. I watched us have a rally that made this one look like a joke. And I've watched what happened at the end of that through 2000, 2001. NASDAQ corrected 72%. So when I tell you that this can get worse, it can get a lot worse. I don't see that happening. I'm just saying that you need a game plan for what if that happens. Are you willing to ride this the whole way down? If the answer is no, then you need more of a game plan besides I'm going to hold it. That's the point of this. So let's just walk through this one really quickly. This is APPS. We had the newsletter and we're stopped out of it. It broke back through the wedge, and this was our stop up here. And that was it, and we're done with it. It's very disappointing because we opened here like everybody else, and I thought we were going to have a great day, and we closed right on the 50-day. But I want to point something out here about this, and this is one that if we bounce, this should be on your radar. So, I guess I'm not waiting to the end. Let's just get into it since it's in order. So you see this 76 level. Look at that going across. You have up here, left shoulder, head, right shoulder here. You should go to here, 62. Why are we not breaking down as much? Why are we still in this middle? So, yes, it was systematic selling. Yes, this is ugly. But if we get this bounce tomorrow or down tomorrow, let me get rid of this because this is really important. And I'm going to spend time on it. So you could get to this 65 tomorrow and bounce. These are Bollinger Bands, and they determine the at the range second standard deviation moves over time. So what you want to do is, if it gets to that level, right, you may see a bounce. Now we can overlay some of the other bells and whistles and see if there's anything else that would support that or substantiate that, and there's not. So what you would do is just kind of mark that down, $65, and see how it acts there. That actually is like the open of this other bar, which is kind of interesting. If we reverse, this one's going to snap back fairly quickly. I have not come close to breaking this channel. And let's get rid of all that for a minute so that you can see this. Okay, here's my upper channel. Right? So a snap of this and then a push back over it might be exactly what it does. So keep that on your radar tomorrow if you see a sell down drastically and then look for a bounce. Riot, we were in. We got in at 57. I think we traded at 61. We rallied up on us 10%. We got the devil horns, which are these two pikes. And then we broke this wedge. For the people that are looking at this, this is going to come. This looks like it's going to come in very hard. This is setting up to come in. And it's no longer even trading. If you notice, it's no longer even trading how Bitcoin trades. Bitcoin was kind of knocking around today, not doing much. This thing's down, 20% in a day. So the decoupling has started. The decoupling started the same time in 18 actually. And you're, 30% down in 6 days. Okay, this is where you were 1 month ago. Okay, so if you think you can't see 18 and can't get down here where it was a month ago, you're delusional. It can. So just keep that in mind. Now, what does it need to do to not do that? And let's get rid of this because I'm not trying to freak people out here. I just want to get to the actual facts of what can happen. So you see this 50-day? You have to respect this 50-day line. If it breaks this 50-day line, this is a support line. This is a support line. There's no support in here. Right, you're going to go to this level, 29. You could go, maybe you can stop here, 32. So there's no support if this breaks. So you got to keep that in mind, and it's not something you want to be in if we break a long-term chart like this and the 50. So that would be your, no matter what, you got to go. FFTY, I was asked about this one a lot today, and everyone knows what this is. I think it's the Investors Business Daily Top 50. Look, they're all tech stocks. So when they come in, this is going to come in hard. And that's exactly what it did. And, we broke the 50 the other day, and now you just added to the pain. And you're right at a support level. This is going to trade a little bit like an index. So like FNGU, this will bounce. I don't know the liquidity of this versus FNGU. Let's just take a look. This is trading 100, 200,000 shares. Looks like a day. And let's just look at what the FNGU is trading. And the FNGU is trading 5-10 million shares a day. So you might want to be looking at the FNGU versus the previous one. So hold on one second. There we are. So instead of looking at this, but for the person that's in this, you break 42. This is your major resistance right here, or major support right here. 39.99. It just happens to be on this. That's where you're going. This is not going to hold you. There's nothing there. So you're going to this level. If you break this 42.19, you're going here. TKAT. So we're trying to break, let's not go through that. Let's go through this today because I think that this might be better to understand why we were looking at the levels we were looking at. So let's do it up the daily. So it's going to be too hard off the daily, I think. Do 15 minutes. Okay, there we go. So this was a trade that I threw out there a while ago. You can go to Twitter and take a look. I bought this at $11. So it clearly broke out of here. I waited for a higher high after the first halt, and then it took off, and then we just started getting levels. And we'll get rid of the indicators to make this simple. So then this gap here from this previous day, this became your support line. Any break of this, and you had to get out. And sometimes you get out and you get stopped, and then it reverts right back up on you. But this gave you a couple opportunities here. So this was one opportunity that it gave us, right? So you add to it, and then you break out of this 31.71 level, and then you just kept going. What I was getting at today when I was saying you need to watch what you're doing here was you have this gap down, right? And then you have today's action. And on today's action, you can see how that first bar gapped down lower than this. So you have a gap here and you have a gap here. This is an island. So that's an island reversal pattern, okay? And they usually determine change in trend. The trend on this one was up. Guess what it determined? The trend is down. As soon as this broke, you had an island pattern. Okay, so anybody that knows that, they may have waited for it, tried to short it on the gap fill, see if it was going to gap fill. It didn't, and then they just went, oh man, we're going to break. And they probably used the low of this 15-minute as their bar. And you can see that because if you look closely enough on that, right, you can see that as soon as you broke that, we went down. And then we tried to rally back up on the day, but it just didn't happen. So this is setting up for a reversal. And usually when you have like exhaustion, or what I'll call exhaustion buying, and then you have these breaks like this usually goes lower. So, I think that this can go to 31.74 fairly easy, or $25 like nothing. So just keep that in mind if you're long this right now. NIO. So NIO, look, we're in pre-production. We don't have a car out yet. We don't have revenues yet. Costs are going up. I don't want to hear about how great the prototype is, and I don't understand batteries and all that. I think that they are producing and they have products. So that might make it hold in here longer. So I'm trying not to get into the fundamentals. But stocks that are like what people are calling pre-earnings, they're going to get crushed because all they have is their name and money. That's it. So they're going to get hit pretty hard. This is setting up. You broke this rising wedge. We'll get rid of these indicators first. You broke this falling wedge, rather. Straight down, straight through it. Open was the high, right at support. Low was here. This is going lower. Okay, these do not reverse. They might reverse to here and then roll, but this is not going to reverse anytime soon. This is something you short when it rallies now. You are below your support line. You have all this selling down. We tried to rally, we failed, and now we're here. Now let's see if the bells and whistles give us anything a little bit more. They really don't. I mean, they tell us that this is pointing down. The 21's pointing straight down and is resistance. The 21 is resistance. You can see that. Now I have a 5-8 cross here, and you can go from there and see what's going on. And you can see this as well. We're probably going to this 32 level is where it needs to hold. If it breaks 32, it's going to keep going. But it could break, it looks to me like it's going to $32. This was one that I was talking about the other day that, look, we're going to get the reversal. This is blank. And we didn't get that reversal, did we? We looked like we were going to get it. We were waiting for this 42.58. And we just didn't get it. And then it just came back down and rejected. Now, this isn't nasty. You basically came to the same level you were at. And you have a support level here. Okay, there's a support level right there. See how that just fits perfectly? And now you throw the bells and whistles in a little bit, take a look. This is not awful. I mean, we're below the 21 day. The 50's up here, but it's not sloping down. This is actually starting to curl up from this basing for a while. So this is not the worst thing in the world. So let's see how this plays out. I would not add to this until I broke 42.50 right now. I'm not going to be in here trying to make pennies when, you could come in and be down $5, $10 during the day. Let's do CTXR. Then I'm going to walk through the W key trade, and then I'll do indexes. So CTXR, we must have looked at this one before. I talked about how this was probably the high because you're up in this upper channel. This is obviously a very small stock, but look how it's just rising. I mean, it's just really respecting these moving averages, and it's really respecting the 21 day. If you get rid of this 8 and 5, you can see it. Look at this. Even when it hits the low and comes down, that's the low of the day. And then here, and it even tried to break out today. I don't know what it does, and again, I try to deal with technicals here, but just a couple key levels to look at here that it's pretty telling, right? You can tell that it's flipped this. It's flipped this from resistance to support. So this could make another rally to up here. So see how it goes. But that's where, where would I be out? I mean, if it broke this 197 or closed below the 21 day, or if it broke here, I would be gone. So this W key trade, I just want to walk through it. So they came out with news today, and everybody loved the news, and it obviously reversed. Here's your bull flag, right? 1, 2, 3 days of just consolidating in the middle, nothing. Never takes out that low, ever, on the stock, and then just rips, right? And so what I was pointing out today were these levels. and saying this is where you need to look at, this is where you need to look at getting in. So I'm not going to walk through all of it, but essentially you buy it when it broke above this line. Then you waited to see if you weren't in yet, it was going to break above this one. Once that happened on Twitter, I said, we're going here, and we did. And then we went above it, and then this obviously we rejected this level and sold down. And then I think I moved it up off the 15-minute. So yeah, so then what I did was after we broke out and we weren't up here yet, you can see how we formed this flag. See the flag, right? Here's your flagpole, and then here's the flag. And what I said was, I'm not going to sell it until I close under this 1751 because it sure looks to me like we're flagging. And we did, and we broke out. So at the close, this thing was at $20. Looks like it's down a little bit after hours to 16. But when you are seeing things like this, then this breakdown bar becomes, this is now your stop. I mean, that's the trade in a nutshell. So don't overcomplicate it. Don't use too many bells and whistles. That's the trade. Once you learn how to read price and volume, I mean, this volume was telling you what was going to happen, right? I mean, look at the differentiation in volume between this and any other time that it moved. It was clearly telling you that buying was coming in. So that's pretty much it for the stocks in a nutshell. I do want to go through Tesla really quickly here, and then we'll do the indexes. But let's get rid of all this writing. Well, there's got to be a way to get rid of all the annotations, all text. Okay, so this is Tesla here. And really what we're saying is, let's pop this up. We're rolling, and we're holding that 21-day. And as everybody may remember or not, I'm going to get rid of these, and I'm going to put this indicator in the Bollinger Bands. I'm going to get rid of these. So as I stated before, and if you're following along, this midline that's right here that just happens to be trending this wedge, right? To see this line, we never really stayed above the midline. So we've always really been on the bearish side of this trade, according to the Bollinger Bands. Today, you broke down through this wedge again, and you broke this little rising wedge here. So this is setting up to come down to here. To me, this is setting up for 590, something along those lines. If you break here, you can get to 505 fairly quickly. And take a look at this H. I mean, it's a classic H pattern. So just be aware of that. And let's get into these indexes real quick. So, and we'll get rid of the Bollinger Bands for a moment. So this is where we're at on the stocks. Now we've broken this little rising wedge. We're unable to get above it, and we're hoping that we don't roll. But this is what's happening. And we are now below the 50-day. We are technically below the 50-day, right where we were here, and we're rolling. And if you look at this, the 21 is now crossing the 50. Like this is not where you want to be. This leads me to believe that we're probably going to 379 and down here, which means that the Nasdaq's probably coming in a little bit more to retest before it begins its rally. This could happen in a day or two, right? It could be fast, it could be slow. The hope is that it's fast and that we get it over with. But you need to look at this, and you need to look at this Q level, 379.66 on the stocks. And let's just get into the indexes while we're here. So the SPY, right on the 21, right? Here's our level, 387.44. Where'd we hit? 388.09. So our minor support's still there. What is this 21-day at? This 21-day is at 388.50. So we closed right below it. And then we're looking here at the 50-day. If you get through this 378.44, your next stop is really the 50-day, and we need to hold there. Look, we're 3% on the SPY off the high. I mean, this is nothing. There's way more carnage in IWM, and we're going to get into that one now. So what you see here is we rallied, and I talked about this in the newsletter that this looked toppy. And I talked about it here when it was toppy, and it did it, and then it rolled again, just like the XLE and the XLF from the newsletter. This needs to hold this trend line, and let's get rid of these indicators so you can see it. We need to hold this, and we didn't. So now I have 3 days to bounce back into it. That's what you have. If you break a trend, you have 3 days to bounce back into it for it to still be considered, quote, in that trend. Just a technical area. So we're not there. So what we need to do is get back in here. Now, if you were going to play this, everybody knows what I'm going to say. That's been following the newsletter. You play TNA because it's 3x it. And that's exactly what you do. And playing indexes right now are not a bad thing. But overlay these indicators. Like we're now below the 50-day. We have not closed below the 50-day since October. Now, that did exhibit an island base on a gap that propelled us higher. What happened here when we broke? Took us higher. What happened here when we broke? Took us higher. See where I'm going with this? So we could flush out here and then head back up. That's what I think is going to wind up happening. We could get to the 205 level. I don't know that it gets that bad, but it could. It could get to the 205 level. And just remember, this is what we trade, or what we've been trading. And, you know, when we broke here, we took the trade, and I said get stopped out if we break the 167 level, and that's when we got out. We got stopped out here. And we got in it here the one time, and then we traded it up. So this is setting up for another trade. These long bars, these are indexes. They're going to revert to means. Indexes will revert to means before stocks. Just remember that. That's why people play indexes and ETFs largely before they play individual stocks on corrections, because they know that that's going to move first. You could buy a stock that just, you don't know who those buyers were, but you know who the buyers in the market are. So you can see here, you're right back to this level. Right? You're going right back to this key level. What happens every time it gets to this level? It bounces. So this is setting up for a bounce here. And I don't know if it's setting up for a bounce for a higher high or what, but we're going to have to figure that out. And I just want to point this out as well. The support line right here. So the chances of breaking this support line and then bouncing back are fairly decent. So let's just watch this tomorrow. My hope is that we just get an exhaustion and that's the end of it. This is just acting, very poorly. We broke today. Open was the high, low, and that was it. Boom. And we went to this. I think we're going to 309. I personally think we're going to 304.15 now. The goal was to break this 324, and we just got to it and couldn't break the 50-day, and we'll put this in. Couldn't break the 50-day, and now we're below the 21, and that's it in a nutshell. It just did not work. So 309.63 is your next key level. 304.15 is the key level after that. You could go through both of these tomorrow. I don't know what's going to happen tomorrow. Nobody does, but just be aware. So that's it in a nutshell. At the end of this video, I'm going to link the NFT video again. If you haven't watched it, you might want to. Those stocks are just absolutely crushing it this week. And that's it. Any questions, comments, please let me know. And give me a comment if you see something in here that you like as a trade. I'm just curious to see what stocks people like the most, either short or long. Thank you very much. And as always, please like the video because I'm trying to get in front of as many people as possible to show them what it takes to be consistent and profitable. Have a good evening.